All right, let's take a look at gold. Let's take a look at gold. Over here on gold, what we established the first thing when we log in, we look at the two moving averages right here. It's very simple. Our dominant moving average right here is our 50, the pink magentas. No secret about that. Our 20 is the white. What we like to do is we only like to buy retracements with trend. Okay, we want to be right with the algorithms and the professional traders. We're not counter trend traders. Counter trend traders lose. Day in and day out, active trader says in the report around 85 to 90% lose of what we do. Typically it's because they're counter trend traders. They don't know where to buy and sell. We know where to buy and sell 15 minutes to 30 minutes ahead of time. And how we do it is we use these black charts right here. And we use yesterday, the market's in a downtrend on crude oil. I said, look to sell the first test of high value area. We stopped it to the exact tick. Play yesterday's video. Today, as gold was moving down, said look for number one when we're right on top at 1262. Why? Why did I say that was a buy at 1262? Because if moving averages are up, we have good spread between moving averages. Actually, we nicknamed this a shark bite trade when we first opened the room. When the 20 gets out of alignment and gets away from the 50 and sort of hooks over, it looks like a big shark opening its mouth there for its prey. Look for the first retracement to low value area, or look for the first retracement to hedge fund. Hedge fund I've been using since 1996. It works all by itself, this green dashed line for support. It was at 1262. My low value area is at 1262.83. My developing profile over here was at 1263 even. On your own ninja charts, the green LVA. So what we do is we look for the first green bar reversal when we come down to it. Let me blow it up here. Look at the ninja charts. As we move down, divergence is so important, triple divergence. I actually wrote a book on this. Because what happens is that when price goes down, I want to see my bottom oscillator go up, meaning set a higher low. Price was setting a lower low. Oscillator was setting a higher low, hitting right on my hedge fund, hitting right on my LVA. I now have 2 times confluence. 2 times confluence is the best confluence you can get on a deep retracement. I mean, it's really good on a deep retracement. Sometimes we get 3 times confluence. I'm sorry. We had 3 times confluence. We had LVA, low value area, hedge fund, 2 times confluence. And we had our developing profile on our own ninja charts, 3 times confluence. So we're trying to buy the dip on the uptrend on the first test, just like how we called the exact high on crude yesterday. Now we just called the exact low on gold today. How do we do it? Because now we know if the moving average is an uptrend, we're not counter trend traders. We do not sell HVA. We only buy the first test of low value area, which are the green dots on LVA's the bottom left chart, low value. Hedge fund you treat just like low value also at 1262. So when price is moving down, we use our proprietary Renko bar. All right, minute bars aren't going to get it. They're way too late. A lot of traders lose a lot of ticks because they use the wrong time frame. So you can use a 3-sim Renko bar to pull yourself in. So what we do is we look at the red bar. Look at these red bars coming down into the buy zone. There's a circle in the buy zone. Check it out. Red bar, red bar, red bar, red bar. Now we're into the buy zone. We're at the hedge fund within 2 ticks and the LVA. So what are we going to do? We're going to look for the first green bar reversal. Now the cool thing about my proprietary Renko bar type is that a doji or spinning top will call the high and low on every swing. I made it to call the high and low on every swing, no matter what. If you look on this major top, it was a spinning top right here. This major high on triple divergence. Right there. It's a spinning top. A spinning top looks like a little box with equal wicks on each side. Look at the major low. It was a spinning top. Little box in the middle, equal wicks on each side. I made a proprietary Renko bar type to only have a doji or spinning top. Only 2 candlestick formations every time. We'll call the swing high or swing low in every single movement we get on every Renko bar time frame. Every one. I'm the only bar type in the world to come out with this. I'm the only one. No one's come out. This is my proprietary way how to do this. So it's going to be a spinning top or doji that confirms the market's in a reversal. So as we move down into hedge fund first test and LVA, I get the beautiful spinning top and the green bar reversal at the same time. Check it out. Right there it is. But as you move down before it turned green, close to get long. Look at the higher low on the oscillator. If you get 2 higher lows from the original low, that's triple divergence. That's the best divergence you can get in the market. You can't get better than that. You cannot get better than triple divergence in the market. If I look at that swing high, 2 lower highs from the original peak into HVA, that's the best divergence you can get. It went from triple divergence calling the exact high to triple divergence calling the exact low. You can see why I wrote a book on this. It's absolutely phenomenal if it's on market profile. And I only like to watch it on market profile. If you're new to trading, I would not trade at all unless you're on market profile, period. You can't trade unless you're on market profile for a number 1 or number 3. You just got to learn 2 setups. That's it. Number 1, number 3. It's going to call these ranges every day because it has to. The market's going to go either vertical or chop. And then number 1 and number 3 is going to call both of them, right? It's going to be one of them. So when we move down, you can see there's your green bar reversal, right? Green bar reversal. Now how you can scale out, use my symmetry dots. Scaling out's a hard part. Entries are easy in this room because we just look for number 1s and number 3s off market profile. You want to scale 50% of your position. If you do 4 contracts, sell 2 on the first set of symmetry. Comes the second set of symmetry up here, boom. Sell 75% of your position. Then what you can do is wait for the third set of symmetry here and sell 100% of your position. Third set of symmetry dots usually calls a high on our markets, all markets, or go for market profile. Once again, it called the high again. Look at that, third set of symmetry. That's why I preach the third set of symmetry. It's amazing. It's absolutely phenomenal how just one indicator on getting out can call the exact high in the market, and it works all the time, right? So it's a great measure for where you want to let the runner run. The third set of symmetry is notorious for calling the swing high in the market or swing low, right? So it's a good measure. Now, it doesn't mean it's going to stop there every time, so it's a good point to at least scale your position. You can be 100%, or if you did 4 contracts, at least bring it all the way down. Do 6 contracts, bring it down to 1 contract holding long. But I would take out almost all my contracts at the third set of symmetry dots and then try to let it run from there. It's a great way to reduce risk. So if I got long all the way down here at 1262.5 and I'm all the way here at 68.5, right? And I just made $600 per 1 contract with limited risk. We don't risk more than $150 per trade. Sometimes we have a 9 to 11 tick stop because you put your stop in 3 ticks above or below the swing high or swing low after entry on number 3s. On number 1s, use a hard 13 to 15 tick stop, no more. But the bottom line, the third set of symmetry, you can bail. And we did it again. Another $600 trade per 1 contract. It's high reward to risk when you trade off value areas, right? Traders that trade off the control point, right, are doing themselves a big disservice on market profile. The value areas are where you want to trade. Look at the swing high. Value area called the low. Value area called the low. Value area called the high. Look on gold. Value area called the high. Value area called the high. Value area called the high. Look on our short yesterday. It called it the exact tick. My point is, take the first deep retracement to LV in an uptrend. Take the first deep retracement to HV in a downtrend, and that's all we do. We're in the number 1 and number 3 2 setups. That's all we need to do.